Let me talk to y'all for a minute, man. I turned this podcast rap show to a business. Refugee been hustling for years since I got admitted. Man, I got admitted, I was broke, then I fucking did it. In the streets fitted.
What's good, people? ESTEDON here, and in this, we've changed the name of the YouTube. We've changed the name of the podcast. This is going to be called the Hustle Holdings Podcast. Basically, I'm turning this into an investment company instead of trying to make it a whole lifestyle brand company, lifestyle multimedia company. I decided to focus in on this investing stuff, and I'm gonna try and build an investment company. And I'm gonna try and show you guys my process in doing that, and some of the insights that I acquire along the way, and you'll see whether they're valid or not. And so it's almost like the journey to the investment company. You know what I mean? Should be. I think it'd be pretty cool. So, and the name of the company is called Hustle Holdings. And right now I'm doing my CSC course, Canadian Securities course. And well, not right now, but I've been doing it for the past month and a half or so. I've been learning a lot. It's been a lot of great information in that course. And talking to people and just seeing how things are going and stuff. And yeah, it's just interesting. Think about finance, fintech, and all this stuff. And so before I don't even want to talk about any of that stuff right now, but what I do want to talk about in this podcast is one of the insights that I gained. Investing and then seeing the results and then reading this or doing this course. And this idea, I posted this on my Instagram. You can see it on the Instagram, the Hustle Holdings Instagram. And it said that basically investing in common shares equals risk capital. And the reason why I'm bringing this up is because a lot of people online are selling people stocks, selling people buy this thing, buy that thing. You know what I mean? This thing's going to go 50% tomorrow or 50% in a year and this, that, and the other. And 100% returns and all this sort of stuff, you know? I'm like, that's great. And I understand that how inflated the money supply is right now, how inflation's moving, and how investment assets tend to outpace inflation or keep up with inflation. So people are like, okay, in order to keep up with inflation, we need to invest. I understand that. Over the long term, I agree. But in the short term, I feel like what people they don't emphasize enough is having some sort of a financial base, paying off debt, you know what I mean? And having enough cash to weather the storm. And realize that sometimes the best investment is no investment, especially if you're actively managing or passively managing. Because you know, sometimes they say it's not what you buy, but what you pay for it, you know? I heard that in a book, this Tony Robbins book I'm reading, Money Master the Game. And it's true, you can buy the best investment in the world, but if you overpay for it, it can be a problem. And what I wanted to really emphasize in this is my experience over the past year, 2024, I'll say, where I was investing in a lot of different things. I had some capital and I was just moving it from one investment to the other, to the investment to the other. Without really like understanding what I was moving it into and understanding what I was investing in and understanding the risks involved with what I was investing in, right? We seem to downplay those risks sometimes. We're like, oh, this thing's going up and think only about the upside, but not the downside. And so and then thinking about like my situation, like, okay, what's the best use of this capital right now? Is it to risk it in a business? Is it to risk it in a common share or a preferred share or in a fixed income security? Or does it make more sense for me to use this money, maybe stash some cash away and invest in myself? Invest in future earning power, invest in courses and whatever, or just keep cash around. Maybe I just want to save some cash for a dip, whatever. And that's something I'm starting to appreciate. You know, like the pandemic really scarred me and a lot of people, I think, where we were dealing with 8%, 10% inflation at some point. And it was scarring because you're seeing your dollar get eroded, right, in real time, and you're seeing everything get so expensive. And it's like, man, like this is crazy. Like, and then you're seeing the markets go up and down and up and down, but generally they're going up. And you're like, wow, like what the fuck? Like I need to put my money in this thing, you know? And so that was the mentality for a while. Where it's like, yeah, like look at how assets are outpacing inflation and yada, yada, yada. And they probably, I mean, they probably will over time. But in the short term, it's like, like instead of me being like, let me slosh this money around into a million different investments, which is what I did, you know, and I'll tell you about my experience later, but in a bit. But instead of doing that, I could have just put it into a cash savings account and fucking kept it. And if I wanted to invest myself, I could. If I wanted to buy a dip, I could have. But just having the option, you know. It's like, why do you think Warren Buffett's sitting on $300 billion of cash and not deploying it? Because he probably sees a very frothy market right now. You know what I mean? Or he doesn't see any deals that are worth buying. You know what I mean? I don't know if he's still sitting on $300 billion of cash, but last time I checked, he was. Maybe he's already deployed it because of the tariffs. I don't know. But last time I checked, Warren Buffett was sitting on $300 billion of cash. His company was. And so that's all I'm like, you know what? Sometimes the best investment is no investment. And I probably would have done better just keeping it in a high interest account than putting it towards a million different things, you know? So I'll tell you guys my experience, my results. So last year I was investing money. I think I invested total capital deployed, redeployed, money that was deployed and then redeployed and deployed and redeployed, probably like around 10 to 20 grand. And with that 10 to 20 grand, you want to know how much I made? I'll tell you this first. I was going through my process of like, I wanted to know my returns, what my returns were last year. And I was like, man, the market was up, Bitcoin was up, the Trump trade, all this stuff, you know? And I'm like, man, I must have made some money doing this stuff. And then I went through my Wealthsimple account. I went through my brokerage and then I looked at my holdings. And it was like, as soon as I saw there was 20 different holdings for 1 year, this is when I knew I was in trouble. I was like, there's no way in hell I understood that much about 20 different things. No way in hell. You know? And that's what a bull market can do. That's what all this stuff can do. Hype. You know? It can get you overconfident. And it definitely got me overconfident. So learn from my mistake. And so I was like, okay, I saw this made money, but then this thing didn't make money. This thing made money, but then this thing didn't make money. And basically, like any gains that I had, they got canceled out by the losses. If not, the losses were more than the gains. It wasn't by a lot. I lost a total of $200 last year on like $10,000 of capital. It's not great. It's pretty bad, to be honest. And I'm just being totally honest with y'all. You know what I mean? It doesn't mean that I didn't make money on certain assets. Certain assets went up and I made a return, but they, you know, the ones that I didn't post are the ones that you guys didn't see. Those are the ones that I lost on. And so basically, two things to learn from this is like active management, not a good idea, bro. Like a passive approach, unless you're a super talented active manager trying to go in and out of positions on a weekly, monthly basis, that ain't it, bro. The second lesson is, you know, understanding that investing in a lot of these assets, especially common shares, is risk capital. It's capital that you should only deploy if you're in a situation to take on the risk. You know what I mean? And I mean, don't get me wrong, I made some returns on Tesla. I made some returns on ASML and the S&P, you know, gold and Bitcoin and MicroStrategy, things like that. But when you put your money in a shit coin and it goes down 50%, you know, like there goes all your gains, you know what I mean? So it's just things like that that you live and you learn, you know? And I'm just, to be honest, I've been only getting into this game seriously over the past 5 years. I've only been taking this game seriously for the past 5 years and really only bringing intensity to the game over the past 2 years. 2 to 3 years. And so you got to think about, there's guys like Warren Buffett that started investing when they were 13 years old. They had a 13, 14-year head start ahead from, compared to me. And so I'm just starting fresh in this game, but it's a fun game. I'm not discouraged by it, and I love the game, and it's a fun game. Like, I just love understanding this game and how it goes, and how just the potential. The potential for gains is just it's so fun. And just seeing how things work out, how certain things react. It's a fun game. I really like this game, and I'm not discouraged by these results. If anything, I'm just, learning from them. But yeah, I love the game. It's a fun game, and I'm not discouraged by my results. If anything, I'm just encouraged to want to learn more and, go about it in a better way. So my strategy moving forward, if I want to tell you guys, I'll tell you guys maybe after I've implemented it, but I have a strategy and we'll see if it works. Basically my strategy, to reference my man Robert Kiyosaki, is to play the real life cash flow. That's going to be my strategy. So my strategy moving forward is play the real life cash flow. And if you ever play cash flow, you see, you work, you save money, you pay off debt, or you buy deals. Small deals turn to bigger deals turn into financial freedom. Or you could just save cash and go into bigger deals. It's not the most efficient way to go about it, but that is a great game, and I love playing that game, and that's kind of how I want to play the game. So keep it simple right there. 12-minute podcast. Biggest takeaways, active management. You got to be careful, man. Tread carefully. And second thing is understand that investing in common shares is risk capital. A lot of people out there trying to sell you this stock, that stock, this crypto, that thing. I know crypto's not a stock, but they're selling you a lot of different securities, a lot of different assets without understanding or explaining to you guys the risk. And that was the biggest takeaway, is like, okay, like before I'm even in a situation to invest in common shares or in any company or really any risk asset, am I in a situation to do that? Could I use this money better? Could I just sit on it? You know what I mean? So sometimes the best investment is no investment. Peace, guys.
Let me talk to y'all for a minute. Man, I turned this podcast rap show to a business. Refugee been hustling for years since I got admitted. Man, I got admitted I was broke, then I fucking did it. In the streets fitted.